Hello, everybody. Welcome to Talk About Houses. I'm Todd.
I'm Juana.
So it's the end of October. This is sort of a sneak preview for November.
Happy Halloween.
Happy Halloween and Nevada
This is not
Day.
a trick. It might be a treat.
And Nevada Day.
Yes, happy Nevada Day.
Hopefully we get a treat in the next 6 to 9 months and not a trick.
Yes.
That would not be good to get a trick in real estate.
No.
Okay. But actually, before we go into that, we'll talk about that later. I want to talk about it now. Okay. So what we're gonna do is we're gonna hit some of the numbers here. None of this it hasn't changed a lot since last month, but it has changed. We're gonna start with the market action index. We'll throw this up here. Now, the videos we did like maybe this time last year or 6-7 months ago, that it was like an 80 or 90, like it was a super hot market, and it's substantially down. It's right down there where basically it falls anymore. It becomes a pretty strong buyer's market. It actually is probably a pretty strong buyer's market. And I think the reason this doesn't show it all the way is because stuff is still selling in relatively quickly, meaning the median days on the market is like 60, which is you may not think, you may go, my God, that's forever. But historically, that's actually pretty fast.
It is. And part of the reason why things are selling relatively quickly is because not only have buyers figured out that they've got negotiating power, but sellers have figured out that, something that we've known for a long time, that usually your first or second offer is your best offer, and after that they actually get worse, not better. So sellers are definitely coming to grips with that and going ahead and negotiating an offer as best as they can, and then taking the offer that is on the table, because they know that as we keep going toward the end of the year, there may be less buyers, particularly the Fed's going to be meeting soon, and chances are those interest rates will go up a little more, and that will push yet more buyers out of the market, particularly in the lower price points. And I think that's something to really watch for, because depending on what your lower price point is in your market, those are the people that are financing. Those are the people that are very sensitive to the interest rates.
The 32 number you see was 34 30 days ago. That is a decline. Every year, if you look at this, it does decline from the spring to the fall. And in 2020, it didn't really decline. It just got hotter because that's when this whole COVID craziness started it. But it did do this last year. It did decline a bit. Of course, not this much. Of course, interest rates weren't like +6, high 6%. But what's interesting is that this is anecdotally, because as you probably know from watching the channel, we just do listings, right? We don't deal with buyers. But we do get to talk to the buyers, their agents on the other side of the deal. And they do have a point which they go ahead and buy the house. It's not like they just try to completely beat up the seller and say, oh, well, I saw a video and everything's overpriced and I need to, because I actually had that once where a guy said, well, I have to buy the house. This was in 2005. I have to buy the house at 15% under market value. And I go, why is that? He goes, well, because next year everything's going to be 15% less. So I was like, okay, that's fine, but my seller is not. No, it was 2004. Because I remember the next year it went up like another 40%. I said, that's great, but my seller just, they're not going to do that. So, but the buyers are still buying. We just have more listings coming on the market than buyers that are buying right now. But buyers are buying, and they're buying houses to live in. Like they're getting loans, which is surprising.
Right. And investors are still buying. So don't think that investors have left the market. They haven't left the market. They are still buying. They just have different criteria maybe than they had a few months ago. They do want more cushion than they've wanted in the last couple of years.
Price per square foot, as you can see, this is the 7 and 90-day average. The 7-day average is leading, so it shows a declining trend. Last year around this time, it kept going up because we had very low inventory. It's declining right now. It'll be interesting to see what happens in the spring with this, and maybe even in the next couple of months. We've got another chart we'll show you that gives you a pretty idea. But if you look at this chart, remember the bottom's not zero. It's $100 a square foot. So maybe it looks like it's declining more than it is. It's about 8%. down from the peak, which was, call it July, maybe June, which is pretty substantial, 8% per square foot. It's a pretty big decline in price per square foot.
Pretty good.
Pretty good. Okay. Inventory. This looks really ugly. Also, remember the bottom is not zero, so that skews the whole thing. But remember that the last 2 years, it's been historically extremely low. And if you look all the way over to the left, that's 2019. That was the last time we had a normal market. So we actually were back to the inventory that we had in 2019 with 2 exceptions. It's still slightly increasing. You can see there, it looks like it's starting to level off. And interest rates are a lot higher than they were in 2019.
Right. So the higher interest rates, like I said, they're pushing people in the lower price points, whatever that is in your market, out because they just can't bear to support those higher mortgage payments.
The other thing we've noticed is that people in the bottom half of the market, the homes sell in under 60 days. Mm-hmm. And in the top half of the market, they sell in over 60 days. Right?
They are. And I think that's really interesting because, like I said, the people at the top of the market are not as sensitive because those tend to have a higher cash buyer propensity. And yet those homes are staying on the market longer. So it's a weird thing. It's also not necessarily that way in every market, right?
Yeah.
So particularly when you're dealing in not so much in Las Vegas, but in other luxury markets, those homes are turning.
Median days on the market is increasing. Mm-hmm. So this is a combination of 2 things. This looks at the amount of inventory, and then it looks back at the trend of 7-day and 30-day time on the market. So it shows it increasing. Mm-hmm. It shows it's likely to keep increasing. What's interesting about this is it does dramatically change. And if you look throughout this chart, the little dashed line does make some jagged changes. Mm-hmm. So because it's a leading indicator, the solid line is smoother, and then the other one is sort of more jagged as it moves around. This one we do every month. We look at this every month mm-hmm. because this is going to be interesting to when we see these 2 swap positions. And my prediction is by the time it's a good time to buy, it'll be like everyone else will have figured it out. Because this is what happened the last time this happened. By the time it was a good time to buy, we were back at multiple offers. Mm-hmm. And then people were getting frustrated that there were a ton of people all trying to buy at the same time. Now, we don't have a ton of people trying to buy at the same time. We've had some multiple offers still.
Right.
But usually the pattern we have now is we put a house in the market, we maybe don't get stuff right away, have a price reduction, maybe another price reduction, and then we get an offer, and it eventually goes under contract, and then it closes.
The thing that I think is interesting is that price reductions are not always necessary to get an offer, particularly from investors. Investors don't really care where you're priced. They know what they're willing to pay, and they are churning out offers as fast as their little computers can handle it, because they are sending offers left and right to everybody. These offers are sight unseen. What they're trying to do is get properties tied up for a particular price, and then they'll go take a look at them, and then they'll go back and try to renegotiate the offer on top of that. So it's this whole game going on with investors. Regular owner occupants are doing something similar. They're putting in offers on multiple properties and seeing who bites, and then going forward with the best house that they can get for the best price.
But they're still picking, because the owner occupant has to live in the house, they're still picking the best house.
Absolutely.
And they're willing to pay more for a house that they like the most.
They are willing to pay a little more, but not a lot more.
Right. They don't want to feel like they overpaid. Do you think it's an emotional decision? Like they don't want to feel like they overpaid? Because they're not making a financial decision, because they certainly could get a model match for less money, but they go, oh, I really like that it backs up to a park, or it's in the cul-de-sac, or the backyard's a little bigger, whatever.
They are making part of it's an emotional decision as far as the house itself, but part of it is also an economic decision, because they are concerned that we are not at the bottom of the market, whatever that means. and they don't really want to feel like they should have waited or negotiated harder, or whatever that looks like for them.
Well, this is a fascinating thing. Define the bottom of the market. Like when were we ever at the bottom? Because you can, anytime you can say, well, we're at the bottom in July of 2012. I go, really? We'll go back to May of 1997. I bet home prices were less then.
Right.
And then, oh, well, that was the bottom then. Okay, well, they go back to 1973. I bet home prices were less then.
I think it's more like think of it like a seasonal thing, right? So
like in the last 5 years, the lowest, cheapest price I could have possibly bought this house.
Right. So I think what they're looking at is a particular cycle. So so if this is a cycle now, the top of the market, if you will, was June of 2022,
right.
And let's say the bottom of the market is, let's say, November of 2022. So that's kind of what they're looking at. They're looking at the very peak and what they perceive as the bottom, and what they're judging is their particular neighborhood, the particular type of house, and that sort of thing.
You typically find out when the bottom was months later.
Absolutely.
And what also funny was about a decade ago, when I was doing the market update videos, I got criticized on a video because I basically said we've passed the bottom, and and we saw that because at the time we had about 400 listings, and what we were noticing was that this trend of not only was it multiple offers, but we were starting to not have to price these homes below we would look at the last sale and price it at that, and we would get some multiple offers, and we were going up again. And even there were still a lot of bank-owned homes. Mm-hmm. But what we saw ahead of time, before they were recorded. When you look at the data, it showed it going down. But I said, no, the home prices are going up because we're getting a lot of offers again, and they're for more. They're competing for these houses.
Right. So we weren't doing price reductions. We were pricing them at where the most recent sales had been.
Yeah.
And so we're at this level, and we're getting prices up here. So that told us that the market had turned, and prices were going up.
Yeah. And what was very interesting was it was actually just before that time frame when I think the investors all showed up with I've got $5 million. I want to buy 50 houses mm-hmm. for like $100,000. And of course that was good timing, right? If you had $5 million and you wanted to buy houses. So the thing that's always fascinated me with, if you're going to buy an investment house, it depends on the price decline, because if you're getting a 1% ROI, which is really high, on a rental, which you could have got back in mm-hmm. 2011 for sure. It didn't matter if prices were going down 1% per month, because you were making that up on your rent payment, mm-hmm. like what you were getting on the rent. And I think that's the thing that surprises me now, that the reason why investors haven't flooded the market to sell their investment properties, because you and I would see that, because they would be coming to us to list the properties, and they're not doing it. Now we're getting more listings now than we have had in the last few years.
Right. Yeah. So I think people know that if right now, if you don't have to sell your property, don't sell it. I think people know that if they have mortgages on them at 2-3%, that's basically free money compared to the money that you can get out there now. So it makes sense to hold on to the property if you can for any reason.
Yeah, I think the people that have the super low rates it'd be hard pressed to have to sell the house unless they have to. Mm-hmm. They're getting divorced. They had someone die in the family. They have to move, and they can't keep the house for some reason. Mm-hmm. They don't want to rent it out. Just people have different reasons for selling. I know a bunch of the people that were yelling the loudest about the market being collapsed did not sell their houses. I've talked to a few of them in private. Oh, did you sell do you have a rental house? Yeah, I got a couple. Did you sell them? No, I'm not selling them. I'm going to keep them. Okay, that's fine.
So what else is going on in the market?
Okay, so this was sort of the preview.
Okay.
We're going to do another one of these in a couple weeks. We're going to grab more. What I want to do is I want to really delve into when we get a better inflection point. Because right now we have this, I call it the slow grind of decay. Prices are going down, inventory is still kind of going up. It gets more interesting when these things start to turn around a little. And not home prices, because home prices lag. But when we start to see inventory decline, or when we start to see the interest rates start to fall and buyers come back, and then days on the market turns around. So I think within the next 6 months we could see that. I think we could see inventory declining, and we should see inventory declining into the spring. If we don't, that's probably bad. Like there's more bad stuff, pain that's going to happen.
Well, but I think inventory will go up in the spring because traditionally lots of homes go up for sale in the spring. So I think inventory will go up, but I think buyers will come back as well.
The other thing to point out is there's money to be made in appreciating markets. There's money to be made in declining markets.
There's more money to be made in declining markets.
We have always done better in declining markets. I did mention on the previous video that our old house flipper, who we used to flip houses with, has rematerialized after a decade.
Yeah.
In, hey, we should be doing this, some specific activities which we won't disclose. Okay? Because they're proprietary. We're going to take advantage of some things that are going on.
Okay.
Yeah.
All right.
So, okay. So that's our update. It's our late October, early November update. We're going to grab the data again in about 3 or 4 weeks, probably around Thanksgiving. And I just want to catch it right when the market shifts so that we have sort of this wave to ride into the spring. I'm perfectly happy with what the market is doing from a investor standpoint because the rents haven't gone down and we're still collecting rents.
Right. So I want to know in your market what's going on with short sales. Okay. Because that
if you're not in Las Vegas.
Right, if you're not in Las Vegas, what's going on with short sales? Because for those people who are touting that the sky is falling, short sales are certainly an indicator that the sky is falling. Okay, so I'm not going to argue that the sky is not falling, but if the sky is falling, then what's going on with short sales? Are there lots of short sales? Because if the short sales aren't there, what does that tell you? So leave us a comment and tell us what's happening in your market regarding short sales.
All right,
Go ahead.
Oh no, I was going to end the video.
Okay, well, if you like the video, please hit the like button, subscribe, hit the notification bell, and share the video, and leave us comments because, like I said, on this video, I really want to know what's happening with short sales in your market.
In your market. We know in this market we don't have them yet.
Right.
Yeah.
So see you on the next video.
All right. Bye.
Bye.